after the kind of bull market we had in financial assets, bonds and stocks, which began in 1981, 82, so for, like 40 years, stocks and bonds went up. The correction, I think, will last a long time. My view is that you're not going to make a lot of money in stocks for the next 10 years.
On today's episode of the What Finance podcast, I have the pleasure of welcoming back Marc Faber. He's the editor and publisher of the Gloom, Boom and Doom report. So Marc, thanks for joining the podcast today.
It's my pleasure. Thank you for having me on your program.
No problem. And yeah, sorry, I always get mixed up with the title of your...
I have the same problem.
Yeah, a bit of a tongue twister. So since we last talked about 6 months ago, a lot has changed. Banks have been collapsing, economic concerns, interest rates have gone up a lot, and there's potential to pivot. So from your perspective, what are you currently seeing in the markets and the economy at the moment?
Well, let's talk briefly about the economy. I have argued now for about 9 months that the US was in recession if the statistics were really compiled in an honest way. It's also difficult to define a recession because, in principle, say your income could be going up every year, but if your cost of living is going up more than your income, then in real terms, inflation adjusted, you're worse off than before. And that's how I define a recession, when people are worse off. And I've seen many countries which went into very high inflation rates, whether it was Argentina or Brazil or Turkey or Russia, after the fall of the Berlin Wall, they had very high rates of inflation, but the people were impoverished because of the price increases, and this diminished the purchasing power of money. So I think that in the US, and especially also in Europe, where prices last year went up by, say, everybody has a different rate of inflation, but prices went up by between 7% to maybe 12, 15%, depending on the job you have and depending on the expenditure structure you have. Do you have children? How many wives do you have? And so forth and so on. And my sense is that the standards of living have been going down now for quite some time. And we have now official statistics from the US and also from Europe that show real incomes for most people are down. Not for everyone, but for most people. And so I think that economically speaking, we are weaker than what the Fed officials try to convey to the public. I mean, they are all lying anyway. They don't know what to do, but they tell you exactly what and how and so forth. But the fact is, if you look at markets over the last 3-4 months, the treasury bonds have been rallying, okay? When treasury bonds rally, it means that interest rates are coming down. So you have to ask yourself, what does the bond market see? They also see economic weakness, because otherwise, with the current rate of inflation, the 10 years treasury would not be below 3.5%. So we had a good rally in treasuries, and we also had a weakness in the dollar in the first quarter of this year. And we had essentially a stock market that was very selective. Some stocks went up, the FANG stocks that had become very depressed, but the typical stock didn't move. In other words, what we traditionally call the breadth of the market was very poor. And if you look at your portfolio, you can see that most likely it would have underperformed the S&P index. I'm not disputing that some stocks went up, But in general, stocks haven't done well in this first quarter. And so my sense is that the market, also because of the banking crisis where bank stocks collapsed, and they have failed to recover very substantially. Because of that, the market is not in a very good condition. We'll probably be able to rally a bit here in April, but then maybe May, June, we'll have a further downturn. That would be, in a nutshell, my view.
Okay, so you're thinking sort of end of Q2, start of Q3 is when we could potentially see a downturn. And is that just because of the economic data? As you said, sort of the performance of the companies is following the economic data and it's finally going to be showing what we've seen? Or why do you think we might see that sort of decrease in that?
Well, in the fourth quarter of last year, S&P earnings were down. In the first quarter, earnings trend was continuing to go down, but the stock market went up. So you have actually at the present time, again, relatively high valuations. And we had a huge bull market, 2009, precisely a year ago, March 6, 2009, up to 2022. And since then, we've been going down, but we're still relatively high compared to the low in 2009. And after the kind of bull market we had in financial assets, bonds and stocks, which began in 1981, 82, so for, like 40 years, stocks and bonds went up. The correction, I think, will last a long time. My view is that you're not going to make a lot of money in stocks for the next 10 years. Probably you will make in stocks more money in the next 10 years than in bonds, than by holding a 10-year treasury. But I'm not even sure about that. And maybe you will make some money in emerging markets over the next 10 years because they, unlike the US, which has just been going down for 1 year, the emerging markets have been down maybe for 5 years.
And is that real returns sort of including inflation, or do you think that will just be returns overall?
Yeah, this is a good question. I mean, I think in terms of inflation adjusted, we reached the peak in 2021, and we're going to go down for 10, 15 years. The way we went down, inflation adjusted, between 1966 and 1982. So yeah, I'm not very optimistic, but equally, I can see that there are lots of stocks, both in Europe and in Asia, that are relatively cheap. I mean, I'll give you an example because we've been recommending to buy Hong Kong shares since last October. They bottomed out like end of October or November. Because in Hong Kong, you have property prices that are going down, okay? But the property stocks, the property owners, their share price is already at 50, 60% discount to the asset value. So my sense is that they have already discounted a very bad scenario. And that rents will come down a lot is not written in stone, because the competitor of Hong Kong, Singapore, has rents that are going up. So the property price in Singapore is still rising, whereby the REITs, the REITs in Singapore and Hong Kong, both are not performing particularly well. But in Hong Kong, they have recovered quite strongly over the last 3 months. So they are, I think 2009 to 2022, the best was to be in an index fund, because the index fund, he owns the FANG stocks, Facebook, Amazon, Netflix, Apple, and so on. Whereas from here on, you need to be more selective in what you buy.
Yes, I'd agree with that. So if we go back to what you were saying before, you think that, we've mentioned that the Fed have done a pretty poor job in the past year of trying to tame inflation. You also,
No, they haven't done a poor job, a disastrous job.
A disastrous job. Yep, I agree. So if we look at your thoughts about next 15 years, why do you think that, where they're not going to outperform? We have to be very selective. And I guess, is this due to the Fed, that they're not going to pivot in time and they're not going to be able to tame inflation? Or is there other issues, sort of, I guess, geopolitically, macroeconomic, that would influence this?
I think if you look at recent elections in the US, there has been in the US a very noticeable move to the left. I'm sorry to say, we just had elections in Chicago. The policies of the previous mayor, Miss Lightfoot, or Mr. Lightfoot, I don't know what she is, have been disastrous. And what do? They elect another one who is a Marxist. And in my view, these policies are doing a lot of harm for a city, and the rich people then move out. They'll go to Florida or somewhere else, but they're not staying around and getting insults and hurt physically because the crime rate goes up and so forth. So we have to see this very carefully. So that would be a factor, social factors. Number two, the policymakers, the Fed and the SEC, and also the banking commissioner and so forth, all these people are unqualified in a very complex financial world. You understand? I've been working in this field since 1970, okay, a little bit more than 50 years. Do you think I know everything about the financial sector? No. I'm not a lending officer. I'm not a derivatives trader. I'm not a commodities trader, and so forth and so on. I trade these markets. I trade occasionally commodities, but I'm not qualified to give an opinion about everything. It's very limited, my knowledge. And the regulatory body, the regulators, they are mostly not very competent characters. And then there is the question, do the regulators, do they protect? Do they protect Goldman Sachs or the small investor in the market? That is a very big question.
So would you say that means it's the end of the US as a power, or is that or maybe just for stock outperformance?
This we don't know. A power doesn't go under overnight. This is like life. You are born, and then it takes you about 24, 25 years to reach your maximum strength as an athlete. And then you can maybe maintain this peak until about 35 or 34. And then gradually it goes downhill, but not in one day. Of course, if you have an accident, it can be over in one day. But in general, it takes time. And the country, the US, began as a small country, insignificant at the end of the 18th century. And then it had tremendous growth in the 19th century. And by 1872, it overtook Britain as the largest economy in the world because of all the industrialization that had occurred in America. And with the Second World War, they really became a world power, controlling essentially the world, and they replaced the British pound as a global currency, as a reserve currency. And in my view, but this is a personal view, the US reached its peak strength, both economically and military. Relative to the rest of the world, they reached this peak strength at the beginning of the Vietnam War. And then came the they lost the Vietnam War essentially, or it was, and no solution was found. But at the same time, Japan was rising, and Japan hurt American industry badly for the first time. And then came South Korea, Taiwan, Singapore, Hong Kong, and after 1980, essentially China. And that had a huge impact on the US. So the result is the US is no longer the largest industrial producer in the world, but China, and is no longer the largest car market in the world, but China, and so forth. And now suddenly India is coming up. So you have a world that is a very different world than it was in the 60s, when America could go to the Middle East and push people around. Now it's different. And we've seen this with the recent reduction in the production of OPEC countries. They didn't ask the US about it, they just did it. So this is a situation that we need to monitor, because in America there are some people, they call them neocons because they're very kind of power-hungry people or domineering people. They want to keep the US as the #1 power in the world. They may go to war over it. You understand? We are at war in Ukraine. It's a small war. But many wars started small, and then they grew because the weapon manufacturing industry, they love it. They love wars. They can supply weapons to everyone. So they are, in my view, there are lots of headwinds for the markets.
Yeah, it definitely feels like there's a lot more risk than there was 10 years ago. A lot more risk in the market. So we've seen over the past few weeks, you mentioned there OPEC plus just cutting the oil supply. We've also seen lots of countries, China and I think Brazil, are going to trade in their own currencies. India is looking to trade in its own currency. So do you then also see, maybe first we'd see the collapse, not the collapse of the US dollar, but a move away from the US dollar as the reserve currency to maybe a more fragmented system in that regard? And then we could, as you said, see the slow decline of the US? Or what's your opinions on that?
I think that the US dollar will lose its predominant importance unquestionably over time. But is it a loss that suddenly appears or that occurs over a longer period of time? We don't know. But say in 20, 30 years, I would imagine that the US dollar is no longer the reserve currency. Let's put it this way. Now, what the new currency will look like, we don't know. But I, as an investor, if I don't know, then I keep my reserves or my liquidity in something I know. And the something I know would be, say, precious metals, because we know what the supply of precious metals is every year. We don't know how much gold and silver and platinum investors will be buying and investors will be selling, because as prices go up, you see a phenomenon that is actually interesting. Normally in a market that goes up, there are more buyers than sellers. But in the case of gold, when the economy goes down, in other words, you have a recession and the economic conditions are not very good, and manufacturing is in recession, and so people are being laid off. So a lot of people who bought a little bit of gold, they go and sell it to create some liquidity, because you can't eat gold. So you have to convert gold into money and into food. So there's a constant pressure on gold prices from existing holders. They hold large positions in gold. I'm a large holder of gold, relatively speaking to my assets. And I could be tempted at some point to sell some, because I think, oh, the price has overshot and it will go down $50, $100 over the next 3 months or so. So there's the investment holding of gold, they never disappear. They're always there. Maybe you lose them for a few years through an earthquake and so forth, but gold never disappears. If you hold coffee, after a while, the coffee is no longer good. You understand? Gold is not perishable. And so there could be supply issues at some point that people just need to sell their gold holdings. Number two, the problem with gold and silver and platinum is, of course, the government, if they could lock you up, they can come and say, okay, we're going to take the gold away from these evil people, the gold bugs.
Yeah,
you never know what the government will do.
And I know in the US that happened in the 30s. So if we maybe take a step back and go back to what we were talking about with the US, and we've mentioned these banking collapses and how this is sort of an issue with central banks. Do you, and obviously we saw it in Credit Suisse as well, do you see further bank collapses in the short term because central banks have kept interest rates so high?
Well, we'll have to see that. But one thing is clear. The majority, I think it's about 67%, close to 70% of commercial loans to, buildings, they are made by regional banks. Now, commercial real estate is facing very significant headwinds from two factors. First of all, the population in the US is hardly growing. 47% of all counties, they have a shrinking population. As I mentioned, partly it's because of poor economic policies, because of social policies and so forth, but also that, in some villages in Europe, the population has collapsed because the young people don't want to live in a small village. They go to the cities where there are jobs, whereas in the small village, there are no jobs. But now there is a different trend occurring. The internet has allowed you and me to be anywhere in the world. We are talking now together. Nobody knows where you are and nobody knows where I am. I can tell you I'm in Chiang Mai in the north of Thailand, and we're talking to each other. But we like together, except I don't need to be in a bar with you. I can be in my home and have a smoke and drink and sit on a comfortable chair in peace. And afterwards, I can watch a movie if I want to. And I have my Bloomberg here. So this has meant that a lot of people, they will never go to an office. They will stay at home. And so in the home building industry, more and more houses will be built with a studio like that someone can work there. Or if someone has a large property like I have a living house where my wife and daughter are staying and I'm staying, and I have my office. It's 50 meters apart, but it's apart. I don't want to be disturbed by women when I'm working and when I'm studying. So people will go less to offices. And nowadays, young people who go actually to offices, they don't want to go every day. They say, okay, we go 3 days a week or 4 days a week, but not every day.
Yeah, it'll be interesting to see, as you said, if during that change, a lot of the commercial real estate in these cities. So I'm just outside of London, which is probably one of the, with New York and LA, it's one of the worst, I guess, most urbanized places. So if people start moving out to further out, there'll be lots of real estate there that's going to be unoccupied, not just from, employers, but also from where people live.
Look, I mean, okay, everyone has a different age and different priorities in life and so forth. There are young people, and I understand that because that was my life. Until I was 60 years old, I always lived in a large city, either in New York or Zurich, or most of the time in Hong Kong, which is a large city and a large commercial center. But quite frankly, for the difference in price between what I need to pay for housing in Hong Kong and what I get here in Chiang Mai, it doesn't make any sense at all to be in Hong Kong. Now, does it make any sense if you like the opera or the concerts or, Cantonese food? Yes, everybody has a different profile of interest. But I was today reading an article about Singapore property prices. A decent apartment in Singapore will cost you nowadays maybe $7,000-8,000 US. And for that, you can have you could have a mansion in Thailand or in Malaysia and so forth. So I think that a lot of people, they will work some of the years in their lives in a city center, and the rest they'll move out and be somewhere else.
Yeah, it makes sense. So if we go back to, we were talking about, I guess, the US losing its power and potentially losing the dollar hegemony. Do you see China then sort of rising and becoming that power? Or you also mentioned India as well. Do you think there'll almost be those two will be competing for control? What are your thoughts on that?
That is a very good question, because historically, many countries were dominating the world, which were not really very large countries. I mean, you look at Spain compared to the population in Latin America, Spain wasn't that large, and it essentially colonized the whole of Latin America, with the exception of Brazil. And if you look at the Netherlands, they were a world power for a while. And also Britain, it wasn't a very large country compared to the rest of the world. So it would be wrong to say just because a country is large, they will dominate the world. But equally, I see China moving ahead in technology. I mean, this is the issue that really disturbs the US, that actually China, in many sectors of technology, has overtaken the US. And it's easy to see why. If you have 1 billion people and you have, for every 10,000 people, a genius, then you just have more geniuses in a large population than in a very small population. So I think this is something that we need to not monitor, we need to accept that China is an important country economically. There's nothing can change that. And they can go to war for 10 years or 20 years. When the war is finished, the advantage of China will still be there. Everybody talks about trade, and then they measure the trade deficit, and they usually refer to the trade deficit in terms of goods, cars, mobile phones, electronic products, computers, and then. But the service sector will be a dominant sector in future. And the difference between goods, the goods that have to be shipped by something, either air or ship or train, But services, we can ship my interview from Chiang Mai to you at essentially no cost and no time difference. Big thing in India. This is a country that has a huge potential. But there are others as well. You know, you talk about Bangladesh, it's close to 200 million people. Indonesia, more than 200 million. Brazil, Pakistan, India, 1.3 billion people. They're just overtaking China in terms of population. And Saudi Arabia, Iran, and so forth. All these countries have growing populations, as well as Africa.
Yeah, so there'll be lots of opportunities. So you've mentioned
that I think is a good remark. No matter how bad things may be, there will still be opportunities.
And you've mentioned Hong Kong, and I guess you see probably emerging markets outperforming, I guess, developed markets in the coming years. Is there anywhere else? Is it just the countries that you've listed, or are there any other markets that you're quite interested in?
Yes, I think Vietnam had a big downswing and now is probably in the process of establishing a major low. It's a promising country economically and so forth. And number two, emerging markets in general. Some are very inexpensive, like Uzbekistan and Iraq. And Latin America has been in a bear market for a long time. And valuations are low now in Argentina and in Brazil. So I see some opportunities. But you understand, some markets may decouple. But if the S&P drops, say, 10%, normally other markets don't go up. Normally. But it's possible that they do. I'm not saying it's impossible, but normally they don't go up, stocks. But the one thing that can go up is precious metals and precious metal stocks. And a lot of gold miners and silver miners, they are depressed, they're very inexpensive.
So yeah, you'd see opportunities there. And I guess I know I've tried to look at investing in Vietnam stocks, and it's quite difficult sometimes to actually have access to the exchanges. So that's one I guess
it's a nightmare.
Yeah.
But as you know, whatever is a nightmare is sometimes very good. It's like with women.
Yeah. So it's a good way to put it. But I guess as you say there, that if it's a nightmare for you, it's going to be a nightmare for everyone. So as you said, there's the opportunities are going to be available because other people won't worry about it. They can't be fussed. Whereas if you put the time and effort in, then you could get the rewards.
Yes, but the problem is also liquidity. It's very difficult to buy and sell. But I'm just saying, economically, the country has a good potential. Not problem-free, but a good potential. And the stocks have retreated in some cases by approximately 50% from the high. So they may be in a buying region. I think the cheapest markets are Brazil and Argentina and Colombia and so forth in Latin America. But they're not as cheap as they were in the 80s. That I want to point out. I was yesterday on the phone with someone from Kenya, Africa. And I told him, well, I bought my Kenyan stocks, the first ones in 1994. Because I went to Nairobi in the 80s already and then in the 90s. And he said, oh, that was a good time. Yeah, I said, yes. Stocks were very cheap and there were no foreigners in the market. There were no frontier market funds and so forth. The same, I went to Morocco in the early 1990s, I think in 92 or 93. And I walked into the stock exchange and the stock exchange chairman came to me and said, oh, what are you doing here? I said, I'm just looking around the stock market and so on. He said, you're the first foreigners I see in like 5 years. And so I bought some Moroccan stocks, and they went ballistic in the early 1990s. And now they are also probably attractive at the present level, but not as attractive as they were then. You know, if you look at asset prices in the 80s, at the beginning of the 80s, at the end of the 70s, the Dow Jones was at the same level than it had been in 66, 18 years before. And of course, in real terms, it had gone down by 70%. But these, that I don't see at the present time, these extremely low valuations, except I think Hong Kong is relatively cheap.
Yeah, and as you're saying, the service industry would probably be, it's something that I'm actually looking at the moment. The challenge is obviously getting the stocks and the valuations that have the liquidity that where you can invest in.
Sure.
But yeah, it does look quite interesting, the service industry, because as you see the economy growing with the especially the China over in China, it will be interesting.
And also, I have to say, when we talk about assets, if I were a young guy and, you know, physically fit, which I'm not at my age, obviously, but in Europe, there's some small villages, you can get properties essentially for nothing. You just have to redo them. But if you're young and have some skills, you can do it. You know, but it takes time. And you may cut your fingers from time to time with the drilling machines and saws and so forth. But it can be done. And that, I think, is a unique opportunity.
Yeah, it's looking at those trends, you know, as you mentioned there before, what we're talking about with people moving out to the countryside more often. It's looking at those trends. And then from there, how can you actually get the best exposure to that from your perspective?
Like. Yes, absolutely.
Yeah. So, Mark, thanks so much for your time today. I really appreciate it. So, my last question is, what is one message you want people to take away from our conversation?
Well, I think that, you know, when people invest, they all dream of buying assets and that these assets then go up by 20% and they can sell them and so forth. I think people have to readjust their expectations. Let's say the 10-year treasury yield in America is 3.5% and less. In Europe, interest rates are still very low, you know, on bonds, maybe less than 2%. It would be unreasonable to expect stocks to go up by 10% per annum. Now, is it possible that they go up by 10% per annum in nominal terms and that the rate of inflation, cost of living expenditures go up by 10% or 15%? Yes. You know, if you look at the country like Turkey, they have 80% inflation. And you could go tomorrow from London to Istanbul, walk around, drive around. Everything is normal. Everything works. No. But it won't work for a very long time. And you don't see the sufferings of poor people. You know, this destitution among the lower classes of society, that is terrible. And I don't think that the Erdogan regime will survive for another 20 years. But can he survive for another 3-4 years? Yes.
Yeah, it just depends. As you said, it's you can only survive until it gets really, really bad, and then people won't rise. But Mark, thanks again. So we mentioned the Gloom, Boom, and Doom report. Is that the best place that people can find your work and what you do, or anywhere else?
Yes, Gloom, Boom. I mean, www.gloomboomdoom.com. Gloom, boom, doom. You see, I also have difficulties.
Yeah, that's all right. I'm glad it's not just me, but yeah, thanks again.
Well, I thank you for your time. And I wish your viewers good investments. I think we need to be prudent. And I always advocate diversification. diversification in different countries of investments and different assets, including real estate, cash and bonds, stocks, and precious metals. I think the fundamentals for precious metals are compelling, but they're so obvious compelling that I ask myself, can it be true? But I'm a large holder of gold, and I don't hold gold because I think it will go up tomorrow. I hold gold because I view it in terms of relative safety. I have a high opinion of that. Until the central banks and the government steal it from me. But we know governments, everything they have is stolen.
Very true. But yeah, thanks again.
Okay, thank you. Bye-bye.
Thank you so much for listening, and if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.